begin our discussion on the program, which is some earnings that have been posted by quoted companies. We'll be examining them. And to look at this with us on the program, we have in the studio our regular stock market analysts. Of course, is not going to be talking to us on phone, but right here beside me, Rotimi Fakejo, the CEO of Enterprise Capital Limited. Thank you for coming on the program. Good to have you with us. And of course, Dagogo Iyomo is the CEO of Milestone Capital Limited. Thank you, gentlemen, for coming on the show.
Welcome.
Yes, the general market mood. I just want to start with that on that note. When we look at yesterday's performance, Rotimi, yes, I wasn't able to ask you this, but what happened? We've seen some kind of rebound in market performance. Could you let us know what happened on Tuesday?
Well, to a lot of investors and analysts, I think I got to a level whereby majority of the stock prices were beginning to bottom out. And I think at that point in time, things are definitely going to have a rebound. And we saw that slightly in First Bank. At least the share price has suffered so much after the woeful result that was sent. And I think we saw quite virtually all the sectoral index moving up yesterday. And I think it's quite a welcome development, at least for the time being. We've seen that turning around and having the kind of effect that we're seeing. But I think more so for the fact that there's still a lot of hope within the market, and the figures that were reflected weren't as bad as would have been, except for a very few ones. So I think investors are just taking solace in that and believing that things are definitely going to get better.
Okay, you talked about FBN Holding. Let's just start on that note. Dagogo, let me ask you, when you look at the numbers released by FBN Holding, what came to you? What were you thinking about?
Well, for FBN Holdings, it's not been particularly a surprise. We've seen First Bank, the flagship of that holding company, suffer significantly from government, the policies of the monetary authorities, particularly the public sector cash reserve that was hiked heavily to 75%. So these numbers are not outrageously unexpected, okay? So we've seen it. I think that eventually these programs are being put in place by the bank to realign itself to the reality that public sector funds are going to be, a major, it's not going to be there to play around with. So, yeah, I think it's just an adjustment period. It's going to step down over a period.
All right. I just want to quote a comment from the Group Chief Executive Officer of FBN Holdings, Mr. Bello Machido. It was quoted here in the report as saying that 2013 has been a very difficult year for the banking institutions, and he explained that the increase, like you said, in the cash reserve ratio, public sector funds, and other changes cost the bank up to 32 billion naira.
Yeah.
That's quite huge for a bank who just restructured. I think the holding structure was established, I think, last year, and so it's not been able to find its footing as a way to be able to, flow in the tide of the banking institutions. Dagogo.
Yeah, if you look across the board, the banking, the earnings returned by the banks, especially the second quarter, you see practically flat growth in gross income. Okay, you see 5%, 7%, 8%, maximum somewhere I think 14%. Okay, so you see, and then when you come down, whereas revenue, income lines are declining. Don't forget COT has been pegged somewhere down 3 per mil, including all the reserve ratios that have been increased. Now these are all income lines that have been brought down, whereas cost continues to escalate. Okay, if you look through those numbers, you'll see that the banks indeed have done significantly well to absorb the kind of shock that came to the system. Yeah, you could say that reasonably, because if it were in some other climes, you would see that that's what happened would have hit really badly. But we can see that it's practically averaged out around the 10% increase, and if there's a drop, 6%, still single digits. Okay, so I think that in absorbing that shock, the banks have reasonably done okay, and as time goes on, we will see that they would have come up, the strategies would have matured to to discount that aspect of their business.
All right. Rotimi, I'll get back to you there, Google. Let me ask Rotimi, because you, like both of you, are always looking at the numbers on the daily basis, watching the movement of prices and all of that. In terms of FBN Holding now, like it said that it had made strategic changes to its operations to overcome challenges posed by some of the regulatory factors that have been highlighted by the Google. What strategic changes do you think it had made to be able to stay afloat and manage the difficult situation that it has found itself?
Well, I think so far so good. Maybe couple with what he has said. The bank, to me, to an extent, is not doing so much about cutting down its operating expenses. And I think that is one of the major reasons why we are seeing the kind of sharp drop that we are seeing in their figures. They actually grew their top line, their revenue, by maybe about 7 or 8%. But I think the kind of differential we are seeing in the bottom line is quite alarming. And maybe coming from a figure of 45.7 billion to as low as 37 billion, I think to me is quite outrageous. Coupled with the fact that at least they were able to grow their top line by more than 14 billion. And for you to still come out with that kind of sharp drop is quite alarming. So the operating expenses aspect, they are not really doing much about it. And I think maybe within the year, I think, was it not this year that, or the year that just ended, that they rebranded? I think they spent too much money on that rebranding. And I think it's not warranted at this point in time.
What does rebranding really entail? Does it change your logo? What else do you do?
Oh, it's quite an expensive venture, because it is a mindset. You need to invest so much to change. You remember when they did Century 2?
Okay.
It is a total mindset that tells you, it changes your systems, your processes, your people, a recalibration actually. So it's quite an expensive venture. And when you introduce it at a time when the environment, your business environment, is working, you can say, against your position, you find that everything will come together and you will really take a beating. And I think that's what has happened here to First Bank. And I think that maybe we will begin to see the effects, because at some time, some fora, the CEO of the bank itself had said that they were bent on, cutting down costs in very significant ways, particularly closing down branches that before now were, you could say, for public interest. So
can any bank really afford to close down any branch? Because I feel that perhaps one of the reasons why we have this downturn in terms of the profit margin for FBN Holding is expansion. Apart from the branding that it did, you have to expand your networks, you have to change your IT, state your structure, see how you can, try to do inclusive banking, as the case may be. You have to position some, ATM machines and some internet banking facilities in some remote areas or part of the city, as the case may be. Could this also be responsible for what happened to FBN Holdings?
Yeah, but that it's a trade-off. You are going mobile, and so you're reducing on physical presence. Okay, so you can't in the case of FBN here, you can't hold on to your many branches, inclusive those that are not performing, so to say. Whereas you're still investing significantly in IT, in mobile expansion. So I think what they're trying to do is to scale down the brick and mortar structures while they improve on this. And maybe, hopefully, we will begin to see some of those effects, down the bottom line along the way. All right.